Hi guys, welcome to my YouTube channel. My name is Sanjay and our channel name is Sanjay Educational Academy. In this video, we are going to see about GST third chapter, charge under GST. See, the charging section under GST is for CGST, SGST and UTGST, it is section 9, and for IGST, it is section 5. Okay, what are taxable supplies? According to CGST, SGST and UTGST, all intrastate supply of goods or services or both. Intrastate supply means supply within the same state. The seller and buyer will be in the same state. That means it is an intrastate supply. So what are taxable under CGST, SGST and UTGST? All intrastate supply of goods or services or both. In case of IGST, all interstate supply of goods or services or both. Interstate supply means supply between one state and another state. The seller will be in one state and the buyer will be in another state. In that case, it is called as interstate supply. So all interstate supply of goods or services or both is taxable under IGST. Okay, what are not taxable? See, these and all are not taxable under the whole GST itself. What are those? The alcoholic liquor for human consumption, petroleum products like petrol, diesel, crude, natural gas, aviation turbine fuel, these and all are not taxable. The alcoholic liquor for human consumption is permanently not taxable under GST, but these petroleum products maybe in the future date it may come under GST when the government notifies it. Okay, what is the maximum permissible rate under GST? For CGST and SGST it is 20%, for IGST it is 40%. Okay, who can collect tax? See, many students will make a mistake here. Some of you will tell the supplier can collect tax, but the answer is only the government can collect tax. Who can collect tax means only the government can collect tax. Okay, next, who is liable to pay tax? Here also many will make mistake that the recipient is liable to pay tax. The correct answer is what the question is asked means who is liable to pay tax to the government. Who is liable to pay tax means who is liable to pay tax to the government. So in that case, supplier is liable to pay tax to the government. In case of FCM means forward charge mechanism. In case of reverse charge mechanism, the recipient itself will directly pay to the government. FCM means forward charge mechanism, RCM means reverse charge mechanism. In forward charge mechanism, there will be three people: government, supplier and recipient. See, the supplier means the seller, recipient means buyer. The seller will sell the goods to the buyer will buy the goods and return pay the consideration which includes tax. The supplier will collect the consideration and pay the tax portion to the government. He will remit the tax portion to the government. In that case, it is known as forward charge mechanism. In case of reverse charge mechanism, same three parties will be there: who government, supplier and recipient. The supplier will sell the goods and recipient will buy the product and pay the consideration. But in this case, the consideration will not include the tax portion. The tax will be directly paid by the recipient directly to the government. This is known as reverse charge mechanism. Okay friends, FCM is normal, but in certain cases RCM is applicable. Let us see what are the cases. First, let us see advocates. Advocate, senior advocate, firm of advocate providing services to a legal services to a business entity in a taxable territory means RCM is applicable. Reverse charge mechanism is applicable. When the business entity is not in the taxable territory means then in that case RCM is not applicable. Next, arbitral tribunal and senior advocate, both of them providing arbitral tribunal and senior advocate are providing services to advocate means in that case also RCM is applicable. The advocate only needs to pay the tax. Arbitral tribunal means if there is a dispute between two partners in a partnership firm, what are the options available to them? They may go to the court, wait for till years. It may take years for judgment to come. They may have to go to the local court, high court, supreme court. So there is a lot of time involved in it, and there are business people, so they can't spend money and time over there. So the other option available for them is they can go to arbitral tribunal. Arbitral tribunal means it is like a community. There will be a chairman. He will listen to both the parties and give a judgment. For that, the consideration has to be paid. That is known as arbitral tribunal. An arbitral tribunal and senior advocate providing services to advocate means In that case also RCM is applicable, the advocate has to pay tax. Okay, next is sponsorship. See, under sponsorship divided into two parts. Sports event other than sports event. Other than sports event means fully taxable. Sports event, see whether it is conducted by recognized sports body or other than recognized sports body. Recognized body means it is fully exempt. Other than recognized body means it is fully taxable. In the case where it is coming fully taxable, see whether the recipient is business, body corporate or partnership firm. If it is a body corporate or partnership firm means reverse charge mechanism. If it is not a body corporate, the recipient is not a body corporate or a partnership firm means RCM is not applicable, and in that case FCM will be either. Okay, I will again repeat once again. See, sponsorship, see whether it is sports event other than sports event. Sports other than sports events means fully taxable. Sports events means see whether conducted by recognized sports body or other than recognized body. Recognized body means fully exempt. Other than recognized body means fully taxable. Fully taxable. In that case, see whether the recipient is body corporate or partnership firm. Body corporate or partnership firm means it is RCM. Okay. See, in case of sponsorship, the body corporate or partnership firm is the recipient, and the other person is the supplier. See, if in any case, if you are getting confused, who is the supplier or who is the recipient means, remember this thing. Who is paying the consideration? Who is there paying money? The person paying the money is the recipient, and the person who is receiving the money is the supplier. Okay. Next, services provided by government. See, before seeing what and all services provided by government as RCM, first let us see which and all services RCM does not apply. See, remember this code word RPPT services. When government providing RPPT service means RCM is not applicable. R means renting of immovable property. Renting of immovable property to a registered person means RCM. In that case, RCM is there. But if it's providing renting of immovable property for unregistered person means RCM does not apply. And PPT services. Postal department. P for postal department. Under postal department, 4 transactions are there. Remember the code word SALE, SALE. Speed post, agency services, life insurance and express and cargo. Speed post, agency services, life insurance, express and cargo. Under these supplies, RCM is not applicable. Next P is port or airport, and on that case also RCM is not applicable. Next T for transport of goods or passenger. Under that case also RCM is not applicable. Okay friends. Next is director. Director giving service to a company means RCM is applicable, reverse charge mechanism. A point to note is the director must be independent director. If the director is dependent director means he will come under employee-employer relationship. So we have already seen in previous chapter under schedule 3, employer-employee relationship in the course of business is not at all a supply. So in that case GST is not applicable. So the director must be an independent director giving service to a company. The company may be a registered company or an unregistered company, it doesn't matter. Independent director giving service to a company means it is an RCM, reverse charge mechanism. Okay. These are the important RCM supplies which has many conditions and all. Rest of the supply and all it is very easy only. If you see if you read the book once, you can see the what and all supplies are there in RCM, and it is very easy. You can easily remember that. Only these four is important. What are those? Advocate, sponsorship, arbitral tribunal and senior advocate, government services and director. Other than that, our RCM are easy only. Remember the section for RCM, it is section 9 subsection 3, and for IGST it is section 5 subsection 3. Okay. Now let us see section 9 subsection 4. Before seeing that, let us see section 9 subsection 5. Okay guys, section 9 subsection 5. Section 9 subsection 5 is e-commerce operators. See, 3 things come under this. Taxi aggregator, hotel aggregator and housekeeping services. Aggregator means, see, he is aggregating the supplier and the buyer, so he is known as aggregator. He is bringing together, so he is an aggregator. Okay, taxi aggregator. In case of taxi aggregator, whether the supplier is registered or not, the taxi aggregator has to pay the entire tax. In case of hotel aggregator, If the supplier is registered, means the supplier has to pay tax. If the supplier is unregistered, means the hotel aggregator has to pay the tax. Next, the housekeeping services. Housekeeping services also same as hotel aggregator. If the supplier is registered, means supplier has to pay tax. Sorry, the supplier is registered, means supplier has to pay tax. The supplier is not registered, means the housekeeping services has to pay the tax. Okay, friends. If the e-commerce operator is not there in India, means it must have a fixed place of establishment in India. If it doesn't have fixed place of establishment also, in that case, it must the e-commerce operator must have an representative to pay the tax. If there is no representative also, means the e-commerce operator must mandatorily appoint a representative for him to pay the tax. Okay, this is section 9 subsection 5. Next, transfer of development rate. In that case also RCM is applicable. In that case also RCM is applicable. The promoter has to pay the tax. The promoter means the builder has to pay the tax in case of transfer of immovable property. Now let us see section 9 subsection 4. In that case, a registered person, not all registered person, few registered person. Who are those few registered person? Person from real estate sector, save a builder or a promoter. He is buying goods from unregistered person. In that case, RCM is applicable. The promoter has to pay tax. This is section 9 subsection 4. But there is an exemption. If the promoter is buying 80% of goods from the registered person and 20% from unregistered person, means RCM is not applicable in that case. But if he buys less than 80% from unregistered person or more than 20% from unregistered person, means then the amount exceeding the threshold limit, on that amount RCM is applicable. Okay, do you understand? This is subsection 4. See, the normal rule is the registered person should not buy goods under unregistered person. If he buys meant as it RCM, but there is an exemption. Up to 80% he can buy from registered person and 20% he can buy from unregistered person. In that case, RCM is not applicable. If he exceeds the threshold limit, means in that case RCM is applicable. This is section 9 subsection 4. Next, section 10 composition scheme. Okay guys, section 10 composition scheme. Why certain suppliers are adopting to composition scheme, means under composition scheme it is having only less tax rate, a reduced tax rate compared to normal GST. See, the only disadvantage is in case of composition scheme, the supplier can't collect tax from the customer. He has to pay tax from his own pocket. He has to contribute the tax, and he cannot claim input tax credit, and he can't give a GST invoice. Instead of GST invoice, he will give a bill of supply. Remember this term, it is frequently asked in the MCQs. He can't give GST receipt, instead he will give bill of supply. Okay. See, he can't collect tax from customers. He can't avail input tax credit. He can't give GST receipt, instead he will give bill of supply. And he can't opt composition scheme only for one registration. Once if he is opting for a composition scheme, means he has to opt for all his registration. He can't opt for only one particular registration. I mean, under section 10, he cannot opt for only one registration alone. When a person is having multiple registration, he can't opt for only one registration alone. Okay. Now, section 10 composition levy scheme is divided into two, section 10.1 and section 10.2b. Under section 10.1, three supplies are there. What are those? Three people will come under section 10.1: manufacturer, trader, and food service provider. For manufacturer, the tax rate is 1% on total turnover. The 1% will be divided by 0.5% for CGST and 0.5% of SGST. So total 1% of total turnover for manufacturer. Next, trader. Trader also 1% only, but 1% on taxable turnover. Same 0.5% for CGST and 0.5% for SGST. Next, food service provider. In case of food service provider, it is 5% on total turnover. So 2.5% on SGST and 2.5% on CGST. This is section 10 subsection 1. In section 10 subsection 2a, section 10 subsection 2a, other services will come under this section. The tax rate will be 6%, so 3% of CGST and 3% of HGST of total turnover. Okay. Okay, guys. A person registered in section 10(1) cannot render any other services. Okay, guys. Suppose a person is rendering service under subsection 1 means he can't render any other services, but he can render any other services up to 10% of previous year turnover or 5 lakh, whichever is higher. Normally, a person providing service under section 10 subsection 1 cannot render any other services, but he can render any other services up to 10% of previous year turnover or 5 lakh, whichever is higher. Suppose he exceeds the threshold limits, means he is disqualified for a compensation scheme. So he should not exceed the threshold limit. Okay, friends, now let us see non-eligibility of compensation scheme in case of section 10 subsection 1. Who will come under the section 10 subsection 1? Manufacturer, trader and food service provider or restaurant service provider. Okay. Now we are seeing non-eligibility of compensation scheme in case of section 10 subsection 1. Remember the code S9RCM. S9NE 9RCM. Okay. Yes for service provider other than restaurant service provider. So service provider other than restaurant service provider cannot render compensation scheme under section 10(1). Okay. Next is non-resident taxable person. Non-resident taxable person means person outside India, not having a fixed place of establishment in India and making supply of goods or services or both. He is known as a non-resident taxable person. This non-resident taxable person is not eligible for compensation scheme. Next is person making interstate supply of goods or services or both. See, in the person making supply in interstate cannot avail compensation scheme, but he can purchase goods from interstate. He cannot sell the goods in interstate. Okay, he cannot deal sales in interstate supply, but he can purchase goods from interstate supply. This is an important point to note. Okay. Next is non-taxable person making supplies in non-taxable goods. What are the non-taxable supplies? Alcoholic liquor for human consumption and petroleum products, petroleum, diesel, crude, natural gas, aviation type of fuel. In that cases, person dealing in that is not eligible to claim compensation scheme. For example, if a person is having a liquor license, in that case he cannot opt a compensation scheme. Next is person selling goods through e-commerce operators and recipients purchasing goods from unregistered person in which GST is not paid. He also cannot claim. He also cannot opt compensation scheme. Next is casual taxable person. Casual taxable person is same as non-resident taxable person, but the only difference is non-resident taxable person is from outside India, is from another country. The casual taxable person will be in the same India only, in same country only, but he will not have a fixed place of business. He is from another state. He will not have a fixed place of business and making supply of goods or services or both. Okay. Next is manufacturer of certain notified goods. What are those notified goods? IPAT services, IPAT, ice cream, pan masala, aerated waters, tobacco products. Ice cream, pan masala, aerated waters, tobacco products. Ice cream, aerated waters, pan masala, tobacco waters. This manufacturer of these goods is not eligible to opt for compensation scheme, but a trader of these goods can opt for a compensation scheme. Only a manufacturer of these goods cannot opt for a compensation scheme. Okay. Next, let's see the turnover limit. Turnover limit for section 10 subsection 1. See, for them the turnover is the aggregate turnover for previous year must not exceed divided into two categories of states. First category is notified states. What are those notified states? Remember this code: MMM AN UST, MAN UST, MMM AN UST. Manipur, Mizoram, Meghalaya, Arunachal Pradesh, Nagaland, Uttarakhand, Sikkim, Tripura. Manipur, Mizoram, Meghalaya, Nagaland, Uttarakhand, Sikkim, Tripura. These are the notified states. For these states, the turnover must not exceed 75 lakhs. Other than these states, the turnover limit is 150 lakh, that is 1 crore 50 lakh. For the notified state it is 75 lakh. For other states it is 150 lakhs, that is 1.5 crores. Okay. For section 10 subsection 2, the aggregate turnover for previous year must not exceed 50 lakhs. Section 10 subsection 2, the aggregate turnover for previous year must not exceed 50 lakhs. The aggregate turnover means turnover for the total India, for all states, all registration. Aggregate turnover means turnover for all over India, which includes all the registration. Turnover includes exempted supply also, but it excludes the interest income. Even though interest income is an exempted supply, it is not included in the aggregate turnover. See, the aggregate turnover includes exempted supply, exempted turnover, but it excludes the interest income, which is also exempted turnover. Okay, did you understand? Okay. To see eligibility, whether a person is eligible to opt for a composition scheme or not, see last year turnover. To see the tax payable turnover, see the current year turnover. For eligibility, see last year turnover. For tax payable, see current year turnover. Okay friends, let us see returns. Filing of return. See, the composition dealer has to file return on 18th on end of the quarter. For example, for April to June, he has to file 18th July, July to September 18th October, October to December 18th January, January to March 18th April. On 18th end of the quarter, end of the quarter, the 18th day he must file the return. That is the due date. Okay, you came to the end of the video. I hope it is useful for you. If you like the video, please subscribe to our channel and share it to your friends. Thank you.